Okay, as they say, third time is the charm. So let's see how this one works. Amy, if you are on, feel free to join. I believe that you can either request to join or I can add you. So when you pop on, I think that's when I'm able to add you. So sorry guys again, Amy and I were trying to do our live from the living room from each of our own living rooms, like I'm home right now, and we just were having some technical difficulties. So we're working it out. I'm just gonna give you guys a couple minutes to, to hop on here whenever you get a chance. Like I said, we're going to be doing this live. It's taken us some time to figure it out with our little technology going on. So we are just trying to get things working properly. It's been a struggle so far, again, because of the app that we're using. It wasn't quite working. So I'm just waiting for Amy to pop on here. In case you guys aren't familiar with these, Amy and I do these live from the living rooms every week. For the last 2 weeks we've done it. This is our third week. And we are super excited to bring this to you. That way we can talk about just different mortgage related things. And, again, we're just waiting for Amy to pop on. We're trying to give people a couple minutes to hop on here. We would love to have you share this video if you're on and you can think of anybody else that might benefit from it. Feel free to share it to your, right to your Facebook page. I'm going to put my phone right there for a second. That way you can see me. I'm just kind of getting everything in order, like I said. We're just waiting for a couple more people to pop on and waiting for Amy to pop on. So Amy, if you can pop on, let's see here. I'm not sure if she's going to be popping on or not. So just kind of waiting to see here. I think I just got a text from her. So I'm going to check that here in a second. If anybody is on here, feel free to give us a wave, let us know you're here. Go ahead and figure out what we can do here. Sorry, I moved my phone around. That was a little crazy. But we again wanted to talk to you about different mortgage loan options, things like that. So we're just waiting for for Amy to pop on here and to see if we're going to be able to work this out. Again, we were having some technical difficulties. Just wasn't working out. Technology does that sometimes. Sometimes you think you have a great system and the technology should be working, and then you set it up and the technology doesn't work, and that is what we were running into tonight. And so I don't know if we're going to be able to figure this out or not. It's worked so smoothly, the app that we were using when we were together, but it turned out that there was a little bit of a delay, so we couldn't hear each other. So you can't really have two people doing a live together and coordinating it without being able to hear one another and being in real time together. So it just was not working how we expected. So we are just trying to figure out what we can do tonight. I'm trying to see if Amy is here. Let's see here. I think I got a text. I'm going to answer that on my computer since I can't do it from the live. So let's see here. Okay, texting me back. Amy, so can you hear me now? I think that you can. If you're able to, I can add you in and we can see if it's going to work. Let me see here. Bring Amy Hendrickson on camera. Yeah. So let's see if this works. Sorry, I didn't text you back because I had this going from my phone.
Hey!
Hey!
Got it.
There you are.
Yay!
Awesome. Yeah, so that didn't work very well.
Yeah, technology failed
Epic
today.
technology fail. Yeah, doesn't work when you can't hear each other and there's a lag. So
yes, I'm gonna set
this
this up
is
here.
This is the way it goes. Perfect.
Nice. Well, glad we got it to work out finally, so we can do it.
For sure. In fact, I am going to go from my living room over to get my little tripod since I'm doing it from my phone because, yeah, I don't want to hold my phone the whole time. So got my handy dandy tripod. Gonna go set it up. Get back over here. This will just take me a second. But yeah, so I think that given enough time for people to pop on, I don't think that, we probably need to wait too much longer. So we could go ahead and get started. Now, I know that I'm going to just turn the phone around just for a second, face my floor. You think about that nice rug. So let's see here. Oh, hi, Emily. How are you? Good to see you on here.
Hi.
Amy and I are having a little bit of technical difficulties. We were trying to use the cool app we've been using, and we were trying to do it for the first time from our own homes, where it's supposed to put it side by side. You can still use titles and stuff. Well, it didn't work because it was functioning about a minute behind. So epic technology fail. Hey, Meg, how's it going? So since our technology has failed us, we're going back to traditional Facebook Live with a person in a little tiny window. So yeah, and we'll see how many children we each have run in and out of the living room.
Exactly. Yeah, real life.
Real life. This is it. This is real. I know when the technology wasn't working, my girls are like, Mommy, are you on video? So they keep coming in and they're putting their face in, and I'm like, no, it's not working. But anyways, so today we wanted to talk about different loan options. And I know that there's a lot of loan options. Hey, Meg, that some people, people know about some of the basics. They've heard of a conventional loan a lot of times. Maybe they've heard of FHA. But we know that there are more programs than that out there. And even within those programs, there's a variety of options available. So, hey, Andrew, how's it going? We were having a little bit of technical difficulty, so we're getting started a little late here. So, Amy, if you want to just dive on in, maybe let us know about what some of those loan options are, and maybe even the benefits or drawbacks, because obviously with each one, there are going to be pluses and minuses depending on the situation.
Absolutely. Yeah. And then if you want to just kind of chime in with questions as you think, ones that we get a lot of times, and just kind of what you hear. So I'd say let's start out with conventional. So that is the probably most traditional financing option. The one that most people try and go for generally comes with, maybe a stronger offer letter and that. So conventional financing is traditionally for a little bit better of a credit score, maybe assets, down payment. They've had, established credit for longer. So that is generally where the direction people look. But if you don't fit that conventional, bubble, that's totally fine, because there's still so many different options out there that maybe would be a better fit for you. So it really, when we, like Heather and I are meeting with our buyers, we're taking a personalized look at it to see, what fits your needs. So what type of down payment do you need? What monthly payment do you need? What interest rate? All of those factors.
Yeah.
A lot of first-time home buyers too generally might end up in an FHA loan. Sometimes they just don't need or have as much established credit, might have a lower credit score, have less money to put down. So that still is a really, really good option. Sometimes too, I think, like Heather, on your end, you probably hear sometimes there's a bad stigma around an FHA loan.
True.
Which really it actually might be better off for the customer. So sometimes that would have a better lower payment, because that PMI insurance is a little bit cheaper, and they don't require, maybe as much assets or credit. So so sometimes is really just a really kind of old way of thinking, and it's not something that is actually a negative for that person. So and a lot of people use that FHA loan, don't they? Sometimes even when they have good credit that would qualify for conventional, they still do that that program because they like that down payment amount and some of the different things that go along with that. Like you said, if they're going to be paying PMI on a conventional loan, they might get that PMI, even though they're going to continue paying it, it's going to be less than what it would have been for that conventional loan. Right. Absolutely. And sometimes, especially first-time home buyers, you're buying your first house. You're probably not going to live in your first house for 10, 20, 30 years.
Right.
So if you are paying, a lower, cheaper monthly payment for the next couple of years while you're in this first house, that's going to be probably better off than potentially paying more for a few years. So,
well, and I think you make a good point there too, because the part of that stigma also is the fact that with that FHA loan, that PMI doesn't drop off. Like with the conventional, you're able to drop it at a certain point. But with that FHA loan, that doesn't happen. But the point at which you can typically drop if you're not making extra payments is what? It's several years in, right?
Years generally. So, if you made just your basic monthly payment and you didn't, your house didn't gain any value over the next, few years, whatnot. You might be looking at 9 or 10 years. So,
yeah, and so most people aren't going to be in that first home for that long. So for those people, they're going to be better off going with that lower PMI because they're going to be paying that PMI for several years anyway. So to use that rationale of like, oh, well, this is never going to drop off, so that's a bad loan option. It may not be. And that's where a good lender like you comes in, where you, and I know that you do this, you sit down with the person and you lay out which programs that they qualify for and help them to see, okay, you know, are you thinking this is your 3-year home, your 5-year home, or is this your forever home? Your forever home person is going to be a different approach than your, hey, this is our 5-year plan or our 3-year plan or whatever.
Yep, absolutely. Yeah, so, and a lot of times too, I might say, all right, you're qualified for both of these things, so go find your house, and then when you actually find the house, then we really know, like you're saying, is this a couple-year house or a dream house, or where are we at in this? I mean, the future is unknown. You don't know if you're going to be where, 5 years, what that's going to look like, but yeah, definitely is this a case-by-case thing. We look at the full picture and see what's going to make the best sense for you.
Right.
So,
yeah, and I know, like, I had a client recently who I met with you it was about a month ago, and this client qualified for all the programs, FHA, most of the programs, FHA, conventional, but then this person also qualified for a veterans loan, a VA loan, and so in that instance, when you were showing him sort of his different options, the VA loan ended up being the best option. So could we talk a little bit to what that loan is and kind of how that one works?
Yeah, so VA loan, if you do have, your active military or veteran, then that is generally a really, really fantastic option. The VA loan, the perk of it is it comes with a 0 down payment. You, of course, can put money down if you want to, but not required. And there's no PMI mortgage insurance with 0 down. So your monthly payment side by side against any other loan product is probably, there's a really big advantage in that VA box. Yeah, so that's just huge. To qualify for that, there is a specific VA website that we take a look at, make sure they've got what's called a certificate of eligibility.
Okay.
Make sure they've got enough time in the service and all of that they meet VA's needs. And then go through and look at that. Yep. Now, VA has different fees than some of the other loans. Okay. So again, look side by side, hey, does VA or conventional, what makes more sense? VA does have what's called a funding fee. So whether it be their first use, their second use, going from there, charge a different fee. So sometimes that fee, let's say it's 3.3% is one of their fees they can charge on a $200,000 house. You're looking at $6,600. Yep. So whereas we do conventional loan, you don't have to pay that. So, it's just again going back to decide what's going to make more sense for that particular person. Yep. Is it 0 down, 0 PMI, or do they have 20% down and all that?
True. Awesome. So, hey, Luke, nice to see you on here. That's some great information, Amy. And so we talked a little bit about the fact that you can get 0% down for that VA loan, but what are some of the other benefits just that when you're counseling your clients that you're like, hey, this is, if we were to boil it down to a couple bullet points, these are the biggest strengths or the things that you hear from clients of why they choose the VA versus others?
Yeah, I mean, just that payment generally ends up being better. The VA is very competitive on their interest rates. Our company in particular, we do a lot of work with military. So it's something that we want to always give back to. It's one of our kind of things we consider their local heroes. So we want to make sure we treat them. I mean, we treat everyone great, but we want to give them even more just for what they've done. So that is one of the ways we're able to help them discount their closing costs a little bit with that piece of it. So but again, it's just looking really case by case scenario with that particular person to see what makes the most sense for them. Right. So, but a lot of times, I mean, if you can keep money in your own bank account or pay off other debt or invest it, that might make more sense than putting money down on the mortgage. So awesome. It really depends for you. So awesome. Yeah. One of the other programs that we look at too is going to be a rural development loan. Yes. So I know we've had a little bit of experience with that together too. So that one is another really great program. 0 down. That one can be for first-time home buyer, repeat home buyer, whoever. But they have a very kind of specific box, more or less, you have to fit in to qualify for the program. So the house has to be considered in a rural area. There's a very specific rural development website that you have to look up the address to see if it's, there is qualified. So if you're looking in the city of Holland, that's not going to be rural development. If you're looking in West Olive, Allegan, Hamilton, then it generally is available for that area.
Yeah.
So again, zero down. Their PMI mortgage insurance rate is actually cheaper than generally FHA and conventional. So
cool.
Again, an advantage on that the payment might actually look a little better, less money out of pocket.
Right. Awesome.
So,
awesome.
Yeah,
and if I recall correctly, I know that there can be some little nuances there, but the boundaries for that, I know they change sometimes, but the last time I checked, it was, I believe, Quincy Street on the north side of Holland and 32nd on the south. Is that still accurate?
That sounds correct. I know Quincy should be accurate, and I think it's 32nd for south side.
I know it's around there somewhere, but and the cool thing is that there's a fantastic website we can go on. We can check out that information easily once we know the property that the person's interested in. Because I know, especially with the RD, I don't think people think of it very often. It's one of those things they don't know about unless they have a friend who's used it, or they hear of it first from you or from their agent, just because it's not as well known.
Yep. There, again, kind of going back to my point in the beginning, that sometimes there's a bad stigma around that one too. Years and years ago, that program used to take an extra few weeks to close for any loan. Because at the end of the loan, rural development has to sign off on everything and give their commitment.
Right.
So if that, process slowed down weeks, then that's sometimes not a competitive.
Yeah.
So now that is definitely not the case. Rural development is very quick turn time. We should be able to do that loan and any other loan essentially in the same time frame. So, and that kind of goes to, if we're looking at a conventional VA, FHA, rural development loan, all of those, we should be able to close in the same time frame. Like 30 days is what we're at still in today's market. So
awesome. Very cool.
Yeah. And that too, it's really, again, going back to, I keep saying it over and over, but going back to that case-by-case scenario thing, like if the buyers and sellers need to close quick, we can get everyone on board to make that happen. If we need to make that closing take longer to accommodate everyone, that's definitely possible too. So.
Yeah, you never know in this market. It's so dependent really on what the seller's looking for right now, since we have such a strong seller market. So that's great. When you're working with a local lender, you can kind of, even if you would be ready with the loan, you're able to kind of coordinate that so that it helps to work out well for everybody, which is something that I appreciate for sure. Now, I think that we talked a little bit about it, but I know that there are more myths about RD and VA loans than what we've brought up. So what are some of the myths that we know about those loans or that we hear commonly? And also, what are some of the downsides? Because we want people to be prepared on both sides to know kind of, maybe I shouldn't say downsides, but some of the things you talked about, like the funding fee, but also with VA, pest inspection, some of those things that people view as hurdles, how we overcome those.
Yeah. So, it definitely is the seller. You might look, if you get multiple offers on your property, that's a very common thing right now. So if you've got, conventional and a VA loan side by side, what are you supposed to look at? So, that VA buyer could be or should be just as qualified as that conventional buyer. Right. So if you have an approval letter on both that, and you can stand behind that, then you're qualified as a buyer. The biggest difference between the two that we see and hear and talk about is the appraisal piece of it. VA is the only program that requires the appraisal to be ordered through a VA system. So all lenders have to follow that. It's only VA approved appraisers that can do it. And sometimes there's less, I don't want to say control, but sometimes that timing just doesn't happen as fast as a conventional FHA or rural development one. Right. Now, generally, we don't have issues with it, and they're all, local still people, and it happens the way we do and in timely fashion. And they're still held the requirements on timing on their end, but sometimes it's just not as streamlined as it could be with the other programs. Right. But again, they're held to the same standards. They have to show the same comparables and reporting and timeliness. So, right. Yeah, that's something I think that just comes up a lot more is concern that well, how does that work? What does it look like? Is it so again, I think as long as you have a good pre-approval letter, a good lender on that end that you can trust in behind it, you're looking at a qualified buyer either way. So
yeah, and I think that just with what you were just saying, I think that goes back to our conversation from last week where we talked about the importance of a local lender, because I know that when you're submitting as an agent that VA loan or that RD loan, and maybe the agent on the other side does have a stigma attached to it, maybe not even from recent times, maybe from the past or things like that, seeing that local trusted resources name on there that they know, that they've heard of the reputation, they've probably worked with personally, that can go a long way in giving that credibility that maybe some of these stigmas that have kind of hung around are, it might counteract that, which I think is something that, again, just so crucial to have a local lender who's able to go over that information. Somebody that agent on the seller side could even call up. I know you would answer a phone call from them, say, hey,
Absolutely.
yes, you're not going to give out that buyer's information, but you're going to say, yeah, we have a solid buyer. This is where we are in the process. This is what we're moving. This is how we're moving it along.
Right.
And that goes a long way in sort of building that confidence in the agent, and then in turn in that seller.
Yep, absolutely. Yep. I think it's really, even if I were personally a listing agent, I would call that lender probably every time and say, what are we looking at? How are we doing closing? And just make sure all of those terms of purchase agreement, everyone's on board for. So just, make sure everyone can stand behind it. You've got a solid deal, and the goal for every person in that should be to get to closing on time, on schedule, as planned. So.
Yeah, and I don't recall the exact moment or the exact.
I've got my little one coming home.
Oh, there you go.
Hopefully, we'll see how this goes. But
we'll see. Well, if we have to end it, we have to end it. But I know that with the what you talked about with the benefits of the VA, definitely seen that to be true. With my client that you qualified, we looked at conventional and VA, and with that VA, I don't remember the exact dollar amount, but I want to say he was looking at about $150 a month difference. It was a pretty big difference, which was big motivation for him to go with that loan.
Absolutely.
And maybe we can go into this more next time that we do one of these, because I don't want to keep you from your little ones. But
no, you're okay.
We've kind of touched on the basic, kind of like the basic 4 programs. But I know that you guys and some of the other lenders in the area as well offer some, I guess we call them add-on programs, such as a MSHDA loan or a home style renovation loan, different options. You obviously have refinancing options for those home owners who aren't quite ready to move, but they're still looking at mortgage options. So maybe we can get into those next week. I want you to get to your girls, and I should probably go find mine. They're outside with Daddy, but maybe we can, just touch on some of those other options in the future, because I think that, again, we obviously want to help people who are looking to buy and sell, but we also just want to be that trusted resource. So even if somebody's looking at refinancing, or they're looking at a renovation loan, or they're looking at something where they're going to stay in their home for a while, we still want to be that resource. So maybe again, next time we can go over a couple of those programs just so people know about them. They know that they're available, or that they even have that information if they need to share it with a friend or a parent or a relative, things like that. Because I think, again, I know your goal is the same as mine, which is just to add value where we can. And so I think by providing them options besides just what has to do with buying and selling, we accomplish that. So awesome. Well, I'm going to let you get to your girls.
Thanks,
next time, I think we will do it back together in the at-home living room, because obviously our technology failed us, and we should stick with what we know, because technology, changing it up did not quite work how we expected. So anyways, have an awesome night. I'll probably see you tomorrow. Oh,
thanks everyone for watching.
We are doing at Home Realty will be at the parade tomorrow for Tulip Time, and our wonderful ladies at Michigan Mortgage will be sponsoring some time where we're going to be there hanging out with you, and then we're going to actually be in the parade. So stop by and see us if you guys are downtown. There's going to be just a hoopla, lots of fun. Love to see you there. And we'll both be there.
All right.
Awesome.
Guys, thank you so
much.
much.
Amy, have a great night.
You too. Bye.
Bye.